But we need to actually shift our focus to earnings for a little bit. For now, Symphony has posted numbers just a short while back. The stock is in fact taking it on the chin because Q4, which is supposed to be the strongest quarter for the company, has actually seen a bit of disappointment. So profitability has taken a hit of about 30% down to about 22.3 odd crores. Net sales too are down to about 133.4 crores, as is the case with their operational performance as well. So let's find out why this aberration. Achal Bakeri, the CMD of the company, now joins in. Mr. Bakeri, thanks very much for speaking with us, sir. What really went wrong in Q4? I mean, this is a quarter where you see your strongest uptake. I was reading your press release. You said things will normalize to the 20-25% mark. But by when can we actually see things moving? Why this, why have volumes just slumped so badly this quarter?
Well, actually, we had a very, I would say, unexpected summer when we had sporadic showers and didn't really have consistent heat, as we normally do. So this was, one of those sort of freak summers, which probably we haven't seen since 1997, when the summer wasn't really consistent and you had unseasonal showers across the country, and especially in northern India, which is our the biggest market for the country. So that is really what has affected sales in this quarter. The sales in the previous 3 quarters were great. The sales, in the current quarter we expect to be very good. But there was that one particular quarter, which is the April to June quarter, which was badly affected.
Hi, Mr. Bakeri. Okay, that point's well taken. Then when exactly could we see some normalization in terms of these volumes? Because, a degrowth of around 20%, that is worse than any expectations on the street. So can we see some kind of normalization going ahead in this quarter or in fact in the next quarter?
Absolutely. No, absolutely. The current quarter and the next quarter, the forthcoming quarters are expected to be, a lot better. We are doing very well even in the current quarter. So last quarter was really an aberration, and we don't foresee that recurring again.
So we can see some growth coming into this quarter itself. You believe that the volumes will spike up, will be back to around that 10, 15%, 20% approximately, because this time you've given a degrowth of around 20%, but you're sounding quite confident. So do you believe we can see a volume growth of around 10, 15, 20% going ahead?
Absolutely, absolutely. However, despite that degrowth, you will see that for the year as a whole, we have still grown. Our year ended in June. So despite that one quarter, which was really an aberration, we have still seen reasonable growth for the whole year, and our margins are intact. All our margins are intact.
Sir, you think there might be a danger, given the erratic nature of the monsoon, that you might have to actually scale back your outlook for FY16?
No, we don't believe that at all. We don't believe that at all. No. In fact, I would also like to take this opportunity to inform you about an acquisition that we have concluded just this morning.
Right.
An international acquisition in the air cooler space. Would you like to talk about that?
Yeah, actually, what kind of synergies will it bring to Symphony?
Well, this is an air cooler company, which is operating in China, which is one of the largest markets in the world after India. Moreover, this company has been, around for a long time, and it has been exporting to several countries across the world. And this is the only Chinese company which has a brand in the air cooling space, and the brand which is recognized in many international markets. So this acquisition gives us 2 things. One is access to the Chinese market, as well as access to that company's customers and its markets across the world. It also has a very strong product portfolio, very strong R&D background, and we expect a lot of synergies through all of that. Moreover, synergies also in sourcing, because Symphony does source a lot of components for its manufacturing, from China, and that sourcing, when managed by the acquired company, will help us in reducing costs, improving quality, and those kinds of benefits.
All right, Mr. Bakeri, then we take all those points into account, but you give us some numbers. What is the acquisition cost? What is the revenue of this acquired company? Will it be margin dilutive? Will it be EPS dilutive going ahead? Give us some numbers.
Sure. This company, had about 3 years ago had a peak air cooler turnover of about 130 crores in Indian rupees, and this company, is owned by a Swedish multinational, which decided to divest it, so because of the nature of the business that it is in, is a niche product, air cooling company, and also, there weren't too many other interested parties because there are not too many companies in this category. So we got an opportunity we were almost the only company to express interest in this, and we managed to acquire this company for a very, very attractive price of just 1.5 crore rupees, or about 15 million RMB. The company is expected to clock a turnover in the current year, which ends in December, of about 56 crores, and its net worth as of June is about 8-9 crores. So it's not a large company, it's not a big bang acquisition, not a big ticket acquisition, but it's a company for the price that we have paid. There is no downside, and if at all, it'll, in the years to come, or in the times to come, it'll help us in expanding our global presence.
Right.
And certainly add to the top line as well as to the bottom line.
Okay. So far, you've not had to resort to any discounts or concessions to push sales. Is that something you might consider?
For what? I didn't get you.
So to push sales
for the current quarter?
In the coming quarters.
That's something which we just don't engage in at all. We don't do discounting. So at the consumer level, our prices are maintained. We really don't have, we could have done that. That's many of what our competitors do, but we really don't engage in any knee-jerk reaction, and we maintain a course, and so we don't dilute margins, for the sake of making the numbers for a particular quarter, because
Right.
any dilution would have a long-lasting impact, and that's not something which is in the long-term interest of the shareholders of the company.
All right. So at around 22%, that's the worst we have seen on margins?
I'm sorry?
The margins coming in at close to around 22%. It's a contraction if you look at it on a year-on-year basis. 22% from next quarter onwards, you expect the margins to improve?
If you see, for the quarter it was lower, but for the year as a whole we have maintained our margins, and but if you look at it at the at the PAT level, our margins sort of degrew by about 4%.
So we're talking about
But
the operating margins.
Well, at the operating margin, that too was less than 4%, at about 3.5%. But for the current quarter and the quarters to go, we don't expect. The margins will be maintained at previous levels.
All right, sir. Thanks very much for joining in and sharing your outlook with us. So that's the word coming in from Symphony, and all the very best for the rest of FY16. Another set of numbers that's hitting us at the moment is Kohinoor Foods.